hello and welcome to this week's update here for my YouTube subscribers. Now, I am traveling this week and then next week, and then when I'm back, we will be doing the new education-based style with this channel. You guys are going to love this. Lots of great stuff I want to show you guys, but for the next 2 weeks traveling, I will just be sticking to the same format. So we saw the markets pull back somewhat on Friday. We know that this week we had the Federal Reserve speaking. They raised rates by 0.25%, as you can see here, expected 4.75%, and that's what it is now, right? This is the Fed funds rate is 4.75%, increased by 0.25%, as you can see, and everyone expected that. Now, the other thing that people didn't expect, though, was the very strong jobs numbers. They were looking to add 193,000 jobs, but they added 517,000. So very strong jobs number. What that would do is then open the door up for the Federal Reserve to continue to raise rates moving forward with those strong employment numbers. Once we start to see employment start to move up substantially and start to see maybe the economy moving towards recession or officially in recession, then you might start to see the Federal Reserve stop interest rate rises and maybe pause or maybe pivot. But that's not what would happen with a jobs number like that. So the Federal Reserve did speak about that. They said that, look, we see inflation pulling back. We can see that with their heavily manipulated CPI number, but they can see it pulling back. We acknowledge that what we're doing is working, but it's not where we want it to be, right? It's around 6.5%, the inflation rate. We want it to be around 2, maybe 3. So it's about double where they want it to be. They're going to continue to raise rates, but they do see the inflation rate coming down, the official number. So there was some positive there, and that's why the markets initially did move up, and then they pull back. So you can see this with all of these indexes. You can see the spike higher, then pull back, spike higher, and pull back. Amateurs open the market, professionals close the market, and that's really what we saw there on Friday, where we saw big moves up and then a pullback in the overall market. Now, the SPX, which is our gauge of the overall market, we need to look at the opening range, 92% accurate. Now, we reset that on the first trading day of the month. These are the numbers you need to write down, 4148. Anything above that is bullish, looking for the markets to move up, okay? Anything below 4037, we're looking for the markets to pull back. That is a bearish opening range mode. As of Friday, we pull back to be neutral at 4136. So we're neutral right now. We don't have a high probability move in the market either way. We will wait and see what the market gives us this week. But for right now, what I can see with companies like Apple, look at the RSI here, 74. Whenever it gets above 70, we tend to see significant pulls back or pullbacks in the market. So Apple is certainly due for a pullback right up against a resistance level, which I can show you here. If I just put that there. So right up against that resistance level there, I'm looking to set up a put bearish debit spread here, where I'm going to buy the 160 call, sell the 155 call. So sell the at the money 155 a put option, sorry. So we're going to set up a put debit spread, sell the 155 put for the 17th of March expiry and buy the 160 put, okay? Setting up a put debit spread, looking for it to move below 155 where it currently is. So I'm looking for a pullback here. RSI well above 70. What I see right now in the markets is retail exuberance, right? Retail money piling into risk assets like tech stocks, like Bitcoin, like a whole range of other things, right? So retail money is piling into these risk assets right now. And what the smart money is doing, the institutional money is doing, is they're distributing or selling into this buying. That's what they're doing. I've seen this many, many, many times. I'm not getting caught up in these moves up like Apple, and that's what I'm doing to make money there, looking to set up a put debit spread. Taking a very small amount of risk though, but looking to make a 2-to-1 on my money, right? Asymmetrical risk in my favor. Once you understand how to use asymmetrical risk in your trading, have it as set and forget, you're on another level as far as making money in the markets with high probability trades. So Apple is one of those ones that's overextended. The other one is Tesla. Now, Tesla in the last month has gone from around 100 to 199. So that's an incredibly large move in a month, right? Doubling in price. So this has run right into the 200 round number resistance. It's overextended, as we can see here, RSI above 70, and very likely to pull back from here, right? Might see a little bit more of a move up, but I think over the next 41 days, up until, to the 17th of the 3rd, the expiry of this put spread, I'd be looking to buy the 195 put, sell the 190 put for the 17th of the 3rd, 41 days from now. About $270 as a limit debit on one contract, right? And I would set that up, set and forget trading, so you don't even have to monitor it. It is set with your profit taker and your stop loss set as you enter the primary order, the trade, and having that again as 2-to-1 risk to reward, right? Again, once you can do this as an automated process with asymmetrical risk in your favor, you are miles ahead of most traders. So that's another one. I'm looking to trade Tesla and Apple to the downside, maybe not this week, not looking for it to pull back straight away, but soon. So that's what I'm seeing right now. These companies are like Meta, for example, huge moves up, right? Retail investors buying in. They've been sitting on the sidelines. It's been going down. There's doom and gloom. They want to get in. They want to put their money to use. But things are a lot different right now. We don't have unlimited cheap money. We are at a point right now where inflation is 3 times higher than what they want it to be. And we need to be mindful of that. And this retail money will run out. And that's when all the selling that the institutions and the smart money has been doing into this retail buying then you'll start to see the pullback. Right? So I'm looking for that to happen over the next couple of weeks, positioning myself with Tesla and Apple, looking to make money as they pull back as well. So that's what I'm looking to do with this market right now, looking for stocks that are overextended, due for a pullback, setting up asymmetrical trades in my favor to make twice as much profit as the risk that I'm taking to achieve that profit. And I think that's probably the smartest move right now. There's going to be incredible opportunities here moving forward when a lot of these great companies do pull back. But for me right now, setting up high probability trades, you can see it, Amazon, big pullback. And you're seeing many companies within the NASDAQ doing that right now. So if we just have a look at some of these, I'll just show you the NASDAQ. You can see this is starting to play out as we speak. So if we just look at some of the companies within the NASDAQ, you can see these type of companies that have had a big move up to the 200, pulling back. Amazon's one of those. Team is another one. You can just see this time and time again as we look on the right-hand side of the chart. If I just bring that in a little bit more, we can see a lot of these companies, excuse me, doing this right now, right? Having big moves up and now starting to pull back. Look at that move. That is due for a pullback as well. And you can start to see these companies doing exactly that. And that's what I'm looking for with Apple and Tesla, right? High probability trades, looking for those pullbacks and making some very good money in just a month or so, and then moving on as we start to get more clear direction where the market is likely to go. So that's my feeling right now with the overall market. Retail buying, that money will run out. Institutional smart money is selling into that, and we will start to see a pullback. So keep an eye on the opening range I spoke about, and also the DXY, the US dollar. If it gets a bounce off this support level and continues to move up, you will see the markets pull back as well. That's another confirming factor. So keep an eye on those things moving forward. A little bit extended right now, and we will look for the markets to pull back. Make some great money on those type of companies like Tesla, like Apple, that will have those pullbacks like we've seen in Amazon and many other tech stocks. And we will then position ourselves next week going from there. All right, my friends, hope you enjoyed that. I'll talk to you again next week. All the best, and bye for now.